Welcome back, traders. My name is Manuel Fonseca. Welcome to Smart Habits. In today's video, I'm gonna give you some examples of how to identify properly the liquidity. In a previous video, I have already explained the concept of liquidity and the theory about this. If you haven't got the chance to see it, I kindly suggest you to watch it before seeing these examples, and the video is in the first comment below.
We're gonna start with the equal highs and equal low liquidity. This is a pattern that is very common in the market, and we're gonna see how it works, okay? And how the liquidity plays a very important role in a bearish trend. So equal highs in a range or consolidation. It's also called a consolidation. Remember that the concept of range in the smart money concept is also referred to the impulse that we're analyzing. It has a range beginning and a range ending. But in this case, range or consolidation, that's the concept I want you to understand it, okay? So this consolidation represents a buy side liquidity, while the equal lows represent a sell side liquidity. These levels attract retail stop losses, making them ideal liquidity pools for institutional sweeps. Okay, so we're going to imagine that we are in a bearish trend. Imagine that this comes from a bearish impulse. Perfect. And then the price, you start looking at price has certain type of not very clear movements. And this is what it develops, like an equal highs and an equal low. But I want you to understand the logic behind this, because in the markets, you just see several candles accumulated, but that's it. No, I want you to understand how the liquidity accumulates and how the institutions plays with that. So imagine that the market is just creating this high right here, then this low. For you as a retail trader, it's okay. Then you see this movement, you continue, you think that it will keep pushing down, but it go down a little bit, do not break the structure or this low and makes this. Now, if you see with the second movement, you can start thinking, all right, this price is not gonna go down. Maybe it's making a pattern of, probably the pattern is making a pattern of selling pattern, correct? So people start putting here, for example, an stop loss. And the stop loss, no, an order, selling order, right? Because it's a bearish trend. So you say, well, it looks like it will be like a selling order. I am happy with this. And well, you just continue, right, with this. Excellent. You put a selling order right here. But also at the same time, there are another trader who is not betting, but he's analyzing the market, or maybe just is betting, and he sees these two lows, and then after this, he sees the third one, which is this one. So that trader says, okay, it's an excellent pattern of, it's a pattern of a change of a character. So definitely the price is going to change. And there start buying in this point, right? So you are not the only one who's seen this double top pattern or this triple bottom pattern. If you're buying, some people are buying here in a double bottom, correct? So what is the logic behind this? Millions of retail traders like you and me start seeing the same patterns, and consolidations or equal highs and equal lows are built once that you see this point that this is full of stop losses. There are millions of traders who are watching these very easy and perceivable patterns, let's say. So there is lots of money accumulated for retail traders who are executing orders right here. So this is when in smart money concepts, it's called a liquidity pool, which because it's just a pool full of stop losses to be taken, right? Now the price just continue moving really slowly on this, just to do what? Make you feel anxiety and put extra orders, could be buying or selling orders, and make this zone a zone that will be soon mitigated by the institutional hedge funds, banks, etc. Right? Now, what happens after that? Let's imagine that all of this occurs in probably this is like in the dead schedule of the market, which is like Frankfurt session or even Tokyo session, right? Which is the movement are not so strong. But then in London session, the price would do the next. Remember that we're in a bearish trend. So ideally, we if we're betting, right, this type of patterns, who are the ones who will have more chances to win on this bet? Definitely the people who are selling. Why? Because they are just following the main trend line, right? Doesn't mean they will it. I mean, by saying this, it means that they're gonna win or got profit from it. Not always, honestly, right? And definitely the ones who are in a not better position are the people who are buying here because they're buying against the main trend line, which is bearish. Now, ideally, this is what happens. In London session, there will be, or if there is not, you will see a big news, all right? Big news. So it will be with a candle of we could be a candle wick. Most of the times it's a candle wick. With this candle wick, the price takes the liquidity, all the people who are selling here, selling, right? So all the stop losses, all the money that was accumulated here was taken just with this candlestick. Now, what happened? When people are executing in the moment, so they see this, they see the next. And I'm pretty sure that has happened to you because it had happened to me. You see the candle, this green candle, this example is just like blue, right? You see the green candle pushing up, and you say, holy moly, it's super strong, this movement. People who are buying are very excited because they say, oh my gosh, this I got a really good trade. And what they do, what the most of the traders, as I was in the past, do put more orders. And people who lost their money here, they lost their money because they were out from after this liquidity taking. They put extra money here because they want to recover what they have lost. Doesn't ring a bell like you and me? Probably yes, right? So in a matter of minutes, right, the candle wick goes up, and then what happens? Boom, 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 boom. It decreases. And now people who start buying here start losing their money. And what happened after that? With another movement, it will keep pushing down. I mean, it will go to the real direction that was bearish, as in this example. And this is the scenario. So you lose money here. People who were buying here were very excited, and then they lost their money because the liquidity was taken here and here. And this is how the institutions take the liquidity of most of us as a retail traders. So as a conclusion, the equal highs or low are not reversal signals, which is something that we used to think most of the times, but they are liquidity magnets. That's the only thing. And institutions often manipulate these levels to before they deliver in the real trend move. And what is the manipulation of movement? This spike, and then you're out. Now, probably if you know this strategy, smart money concept and so on, probably this candle wick activated an order block that was right here. Now, for this, you need to understand the simple market structure, which I have a video, and I ask you and invite you to go and see it. Okay, but this is the first part that I want you to understand, and this is how the liquidity and the logic behind this type of liquidity. Okay, so bear in mind. Let's see. Second liquidity partner, which is also super common, it's the trend line liquidity. This is one of the this is the one that cost me the most to understand, honestly, because for me it was difficult to understand this liquidity, this trend line. We are taught, or we have been trained, or we have learned as a beginner traders that the trend lines are very profitability areas, right? Well, where there's a lot of profit, right? How is the theory? How the theory works? Well, simply it works the next or in this way. So you will see, you will take as a consideration the higher high, then you will take into consideration the next high, and then by the third high, you would expect, and in this case, because we're in a bearish example, you would expect a bearish movement, correct? That's what you may be thinking, right? But trade lines are made to attract liquidity as the other pattern as well. And this is one of the most common. I'm gonna let you know. I'm gonna show you how it sometimes do not work, as simple as that, right? So this is the next, for example, because in the market you could see lots of trend lines, and this is the thing, you will start getting confused. So look, for example, this in this example, the trader who are executing this pattern of this trend line, number 1, 2, and here should be the number 3. So they execute the order here. Boom. If you have a very restricted stop loss, that person, for example, in this case, is in profit, but that person maybe, if she or he put a really tight stop loss, he or she will be out, right? But now look the next. This is a trend line here, okay? So people enter in the third movement. They say, okay, we have money, it's great, perfect. But now they're also seeing this trend line right here. Boom, 1, 2, and 3. So 1, 2, 3. And what do we do as a retail traders? We put another order, right? So this is the thing. And as I said before, when a pattern is extremely evident, watch out, because there's millions of people who are watching the same. And big institutions, they know that. So here is a lot of money accumulated, and here is another bunch of money accumulated right here, right? So as you have seen in my previous videos of liquidity, and by the way, if you don't know anything about the concept of liquidity, I suggest you to watch my video, which I explain the theory about liquidity, which is in the first comment right here. Okay, so let's continue. So what you have seen is that most of the times the price gives you certain type of joy. When I say this is that the price goes towards the direction you're expecting the price go, which in this case is bearish. But then what happened? Imagine this is a piece of, it is a news, or is a New York session or London session, and then the price would do the next is huge candle, spike up, and then what happens in your mind? My gosh, is making a pattern, a changing pattern. You know, for example, people start watching here. Oh no, in this moment the price actually is doing a head and shoulder. So shoulder, head, shoulder. So it's time to change and start buying, correct? And as we saw in the previous example, you start buying here. Why? Because apparently the price has changed the direction. Right now, you start buying. People who were executing these trend lines are out, right? And now, what does the price do in this case? Probably have a small reaction, and then boom, keep pushing down with the real direction that was what, in a bearish range. Okay, this is we're watching examples in a bearish trend, and this happens bearish, bullish. But now I want you to understand it in a bearish range, because it's really, really important. Okay, have you ever been trapped this way? I hope you say yes, right? Because once we fall down, we need to fall in this type of patterns at least like 10 to 30 times, or even 100 times, to realize like something is not really good with our strategy. Okay, so I'm not saying, I'm just a small disclaimer, I'm not saying trend lines do not work. There are trend lines that do work, but they work mostly when they are in high time frames because they're likely to be respected, but not always. And second, because in some strategies, it's not the main confirmation, right? It's just like I don't know if you say confirmation, but it's just like uh, people use it as a fourth, fifth extra confirmation. It's not like a requirement for the trading plans, correct? So in smart money concepts, liquidity are trend lines are not meant for entries, but for monitoring where the institutions may take liquidity mostly, okay? And the break is often a manipulation, not a reversal, because this is what people think. This break is a reversal? No, it's just manipulation. It's just a spike to take all the money accumulated here, and then it continues down. Perfect. And now let's see the double tops and double bottoms. In this case, we're going to analyze double tops, okay? Double tops patterns because we're in a bearish trend, okay? Now, the double tops or bottoms are not true reversals. That's something you need to understand. They are liquidity traps where retail thinks that market will reverse at the same level. But in reality, institutions accumulate orders above or below these levels. Okay, so we have seen or we have understood so far that, for example, when the price makes double tops, it's because it will keep pushing with a bearish trend. Are we correct? Are we right with that? Yes. So what happened in this case? So we'll start watching all the lows, sorry, of the highs. So this is a high, right? And this is another high. Perfect. So because we're thinking in this pattern or in this pattern, the first liquidity sign will be this one. So people start executing orders right here, right? Because it's likely to happen. You would say for yourself, oh, probably the price just went a little bit up that we expected, but I'm pretty sure it will keep pushing down. Or if it fails, maybe I will wait for the price to get to this high, which looks even better to execute a double top pattern. That's what you say to yourself, right? Now, what is actually happening here? If you're watching this, there's again tons of millions of people who are watching the same pattern. So they put money here and they put much more money here, right? Because they're expecting the price to do something. And this is what actually happens to some of us. So the price goes a little bit down, right? So we're happy. Then these movements are actually very, very slow. The price goes up. You start freaking out because you say, no, I cannot lose this order, right? I need to win this trade. Okay, I'm gonna extend a little bit the stop loss. So I have so the price has a space to move, right? And they keep pushing up, activates your second order. Then it goes here mainly to the entry point, and then you say, I'm happy. I have two orders going towards the direction, and I have executed them perfect. And you feel like a pro. And then what happens? There's like a news, something happens in the market, or simply just a excellent moment for the market to do the next push-ups, and then boom, push-ups. the price push up, take the liquidity of this high. If people are buying a third time here because they're executing a triple top pattern, but they're out, and then the price continue with the real direction of the market. Has ever that happened to you, my friends? If not, in my personal case, it has happened tons of times, and it's painful as F because I'm not finding any logic on this trading thing. It's like I'm executing everything. I win some, I lose most of them, and I'm just feeling pain because the market is not validating everything or all the effort I've been doing in learning all this stuff. So this thing really works? So you start questioning yourself, but that's matter of another video. So now, my friends, that we have seen this three patterns of liquidity. Oh, by the way, just let me remind you that the double tops or double bottom were not because the price respects them, but because institutions use them to gather liquidity before the real move. So they do work a little bit as we just have seen, right? You have to just to put all of this into practice in the real market. And I know that what I'm telling you, you have lived it, right? And if you haven't lived it yet, it's because you haven't been enough time in the market. And I'd say that with all the love, right? Because I'm not trying to be more than other traders. It's just like my experience as a trader, right? As a trader in the way to become an excellent professional. That's the thing, right? But the thing is that I have lived this many times that I can relate to you. So the thing is, they do work a little bit. They do work, give you a little bit of joy, and then takes you out. Simple as that, right? Perfect. Let's see examples in a bearish real market scenario to pull all this into practice to finish this video. Right. So for some of you who have seen my previous videos about range beginning and endings in a bearish trend, you remember that we have analyzed the Bitcoin chart because I've been having fun analyzing it, and it has shown really interesting moves. So by the moment that I made that video, the price was right here, and I told you guys the price will keep pushing up. I will react in these zones that are here marked right here. And look, that's very interesting. The price actually did get to this area, and now currently is actually doing a reaction, having a reaction. What will happen after that? Well, we just have to follow up. If you want to see that video, I recommend you to watch it and see what I'm telling you. But then now we're just gonna put into practice the three patterns of liquidity what we have covered today, which are equal highs and low liquidity pools, trend lines, and double tops, double bottoms. Okay, now here in this graph, in this range, from this beginning to this end, they are the three patterns all combined here. Can you spot them? I want you to have a minute. If you want, just pause the video for a second and try to analyze where are they? Where are the trend lines, equal highs, equal lows, and double top, double bottom patterns? Stop. Let's watch this. People, when they saw that the Bitcoin was going that abruptly in downtrend, right? So towards a downtrend, people were actually executing orders. Wait, they were executing orders left and right to sell. They were selling right away. So look at the next. Now, look how interesting the price works right here. So here. So we're gonna analyze the first pattern, which is the trend line pattern, right? So I'm gonna put this symbol, which is money, which means accumulation of money, and people who are selling the orders right here, right? Look. So in this trade line, this is point number 1. Probably this is not the correct one. 2 and 3 here. 3 here. People were executing orders here to sell because many people, when they saw the Bitcoin going down, they start selling. So look how the price works with people's mind, which is normal. It has done that with me as well. Look, let's do the next. Sorry. Look, imagine you're executing this pattern right here. Perfect. So the price did enter in the point that you were expecting. Now you're expecting that it goes down, right? Boom. You're happy. You're really happy. This is a little bit of joy that I said to you the price gives you. Some people get overexcited and then they're executing more orders or even over putting over more positions in the market, right? Now look, it goes up. Now you get scared, right? You put another order to recover. Oof. So in this moment you say, okay, we can handle this stuff. I think we can handle this thing. Let's wait a little bit. Wow, wow, it's getting down. You're getting again excited, but you don't know what to do. And then what happened after this? Give you more joy. All this adrenaline, maybe you may feel or not, or what I'm trying to recreate is what you may be feeling at that moment, which is insane and super painful. You know what I'm talking about if you're being in that position, right? And now, look, probably you go have fun with some friends, you start playing video games, whatever. You just try to forget this for a while, but then you realize the next. I don't know, this is like 3 a.m. You're, oh my gosh, it's having consistency. Probably you put another order just to recover or just start putting break evens, whatever, right? And look, if you put break even, you say, yes, I'm gonna put another one because now it's a proper moment to put another selling order, right? Boom, you're out. Does it occur to you? Sometimes, right? Sometimes it happens to us, right? And this is how the trend lines are made just to, you know, I use the trend lines to see where the money is located or accumulated. And after that, I made decisions, right? But so far in this moment, I wouldn't put an order right here because even in my experience after doing back testing, I have learned that the price do have a certain reaction towards the direction, but then starts like playing with our emotions and go the opposite direction, right? Perfect. So this is an example of how the trend lines sometimes do not work, right? Even though this is we're in a bearish trend and we had likely more possibilities to win, but it wasn't just in this case. Now we're gonna see the second pattern of liquidity, that is the double top or double bottom, and I think you already know where they can be. Here is the double top pattern here. So because here this is a high, you can put an order here. Here this is another high. So you may be thinking putting another high here, right? So let's do it. So let's do it as the retail traders may do that do not have a real strategy or concepts in their on their favor, right? So after you lose this order, you say, damn, I'm gonna recover that money. So you put another order here. So you're executing a double top pattern, and again, give you a little bit of joy, keep pushing up. You're still in the trade. You wait a little bit. You say, let's put the third order so we can recover what we have lost in these three orders. So this order, this actual order you're executing here has 3 times more lot size than the previous one, right? And now you see, oh God, good, good, good. We're good. We're nice. Excellent. Oh, it's pushing down, right? Probably at this point, you may start taking profit or doing something, but look what the price do. Goes back to your entry point and then gives you a little bit of joy. Probably you just want to recover or it just closes in break even. And well, give me a second. Boom. This is what actually happens. And this is the painful thing. The price never reaches your take profit, or probably you will be a little bit time in profit, but you're so greedy that probably you cannot recover what you just lose here, or you just want to win. And now you're out. Doesn't ring a bell, my friends? Perfect. Now we have seen how these two patterns has not worked. straight lines, and double tops and double bottom. Perfect. Now, you were asking me, probably you may be asking, okay, Manuel, but we want to see the patterns of equal highs, equal lows. We cannot see them here in the market. I'm pretty sure you can see them. But to make it even clearer, I want to make it in I want to show you this in a smaller time frame. We're in a 1 hour time frame. Let's go to 15 minutes time frame. And a 15-minute time frame, definitely it will be easier to see. Now, just bear in mind the next. Remember that the liquidity high, the equal highs and equal lows, it's where the price moves really slow, so there are very little candles, right? And where it's very evident or very easy to spot patterns, right, of confirmation of patterns to execute orders. So, and they are also known as consolidation. So this is a consolidation. Here is another consolidation. And here is another consolidation right here. So if we go in detail, let's go down in 15 minutes and analyze these consolidations. Consolidations, because you already know the concept. The price just move between or among highs and lows. Look how interesting it works. Perfect. So here it is. Look, the price makes this high right here. This high. People may start like selling until this point, right here, but they say no, it's too low. Maybe let's take into consideration this high. All right, so they start like putting orders here because they see here a double top pattern. Okay, so they start selling. You know all the dynamics behind this, right? And then what happened? There is a triple top pattern, and they are really happy executing orders here, selling, bearing. As we say, as I like to say with some of my friends, which is it's like bearing and stomach ache, right? Now you just execute an order. For example, people who were like buying here, they were here executing orders here, and after this low, they say no, we're out. But then they see a double bottom pattern right here, and they say, okay, good, we're good, right? We're good. We're good. Let's put let's see another one. And in this case, particularly, it went down. So it went down, took the liquidity of the people who were selling here, buying here, push down, entered probably in order block, and keep pushing up. But all the people who were selling here were out. So, and this is the thing, nobody's gonna trust this double bottom pattern, for example, or this triple bottom pattern. Why? Because we're in a bullish, because we're in a bearish trend in Bitcoin. Remember, people are selling Bitcoin at this moment because they think it will keep pushing down, right? So even with this frame, with the bullish trend, they do not care. They keep selling. They sell all this point. That's why the market provide us many opportunities to sell in this scenario. You could sell here, then second, third one, fourth, fifth, and even as sixth time here. So you could sell many times, and then boom. That's why the price, when it breaks the liquidity pools, makes it with these huge candles. You see, one and two candles were enough to took the liquidity or all the stop losses of the people who were selling here. And this is the thing. Of course, People who are buying at this moment, they win. Yes, because this is a matter of probability. So they were in the correct spot to execute orders. And the ones who were in the in not not in the best position were the ones who lose, but also they were the ones who lose because the amount of money that were there was much bigger than this one, right? Definitely, there are some players in the market, not players, some traders in the market that do win orders. And our job on this is being those who win, because the ones who win here were a few ones. We need to be those ones, not these ones who are here selling and losing orders, right? Now, this is, my friends, and with this, we're gonna finish today's video in which I explain the three different patterns. We have seen equal highs, trend line, and double tops and double bottoms. Okay, now I kindly suggest you the next, my friends. If you find this information interesting, please send this video to a friend, subscribe, and also do your work, do your own back testing. Find 10 patterns in which the liquidity do not work properly, right? Make 10 patterns of equal highs, equal lows, make 10 patterns of trend lines, and 10 patterns um, of double top or double bottoms, which do not work based on these concepts. My suggestion again is, if you don't understand it, watch this video. I kindly suggest you also to watch the theory video, because in the theory, I give you all the insight, and this video is for practice. Okay? I hope you have enjoyed this class, my friends. Thank you so much for watching, and see you in the next video. Bye.